we're going to touch on the topic of stocks, and we're going to start breaking down some of the terminology, the lingo, so that you start to get a better understanding as you begin your journey. Or some of those of you who have probably been a year or two in, who have been doing options or even buying shares, but still don't really know the full lingo. So maybe if you're in a Discord or something and more advanced traders are saying certain things, you may feel kind of lost on as to what's going on. So let's dive into that. I got a caller calling in that I'm about to bring into the to the little joint here. Bree, are you there?
Hey.
Hey, what's up? So let's kick this thing off. I wanted to try to, teach the people a little bit about the concept of leaps. So you wanna, kind of start it off, kick it off for us?
Yeah. Okay. So, leaps technically, are, I would say, option contracts that are about anywhere, I would say, over a month. Now, some people might consider a leap 2 weeks, they might consider it 3 weeks, but I would consider, to me personally, a leap would be anything longer than a month expiration from the day you're getting into it, from the day that it expires. So you would get a contract. Today would be Thursday, February 20th. So you would be looking at any contracts March 20th and beyond.
Okay. No, we'll take that. So I wanted to just kind of step back once again. So like the word itself, leap, it stands for long-term anticipation securities. So
Mhm.
that way, the listener at least understands what each of those letters or what that phrase represents. But back to you.
No, perfect. Yeah. Um, I would say, the great thing about leap options, um, there's, excuse me, less risk with leaps because you're getting time on a contract, right? And, I know the listeners are probably generally going to be beginners, but for most people that don't know of the word theta has a lot to do with the contract and how it decays. I don't want to get too much into that because we're talking about leaps, but theta has a lot to do with time and how much time you have on your contract. So
No, no,
leaps
that's
are for those
perfect. That's perfect. No.
leaps are for those people that may have 9 to 5s. They might be students, they might be moms, dads, caregivers. They're just good for people that aren't able to look at a chart all day, 8 hours as the market's opened.
Sure, you said it perfect. You said it better than I could say it.
Sorry, not 8 hours, 6 hours.
So yeah, the eight, I guess about 8 hours that the market is open from 9:30 a.m. to 4 o'clock p.m. Eastern Standard Time as far as the average, market day. But I would just kind of add on, as you touched on, some people may say technically a leap might even be 2 weeks out.
Hmm.
In my mind, it's at least a month out. That way, you just have a solid chunk of time for whatever play that you are getting ready to hop into to develop. Um, I would say that. Oh, another thing with a leap. So, like you said, the example of March 20th, right? It's today, as of this recording, it is February 20th. So, if we got a contract that expires March 7th, that's a leap. It's like a 2 week leap. If we got a contract that expires in June or August, that's going to be more of the traditional type of leap that people with way more money than us will get, because the more money you have, you get to buy further into the future. That's what you're buying. Like, so when you mentioned theta, I got hype because it ain't a small thing. You could break it down a little bit further if you want. For the listeners, what theta is, if you want. You know what I mean?
Yeah, like the good thing with leaps is you give yourself ample room and time to be wrong, and you still have the trade could still work out in your favor as well, because even though we don't want to encourage averaging down, as we all know, sometimes it might be news that might alter a stock. It could be something the CEO said, something the CEO didn't say. So leaps kind of just protect your money, your contract, from kind of getting hit from a ticker, that might be volatile.
Yes. No, that's perfect. And then the other key parts are you don't have to wait until the end, right? So if we got a contract on Palantir, for example, or April 20th, April 21st. Say if we got a $150 contract for March 21st. It's February 20th. If that thing go off tomorrow, and when I mean go off, some people are conservative, right? Some people might play options and only want to get 10% profit and get out, or 20% and get out. That's fine. So if you brought the contract today, February 20th, and that thing gave you 20% profit tomorrow, which would be February 21st, and say you spent, I don't know, $50 for the leap, and now it's at $85. You made $35 that next day. You want to take that and run? You can run. You know what I'm saying? Now, if you want to hold that same contract, further in, say for a couple of weeks out, because based off what's happening in the news and contracts that may have been signed and partnerships and stuff like that, that the current price might go from 107 hypothetically, not only back to 125 where it just dropped from. There's indications from multiple sources that it might go to 150. You might want to hold on to that contract for another couple of weeks. So now, instead of just cashing out with the $35 the next day off of maybe the 5 to 10% profit, whatever it is, you hold it longer, and now it done ran up from 107 to maybe 128, and now you done made about $1,500 off that $50 contract. So it's all up to you, the investor. And going back to points that I kind of touched on earlier in the spaces earlier today that was hosted by Autumn and Money Man Sal, Prince, and all these other traders that I know. Basically, it gives you time. It gives you time to let your play marinate. You know what I'm saying? You might work a 9 to 5. You ain't got time to check those charts every 2 and 3 minutes. You get a leap. You know what I'm saying? A couple days go by, like, let me see what's going on. Or you happen to watch the news. Oh, yeah, I remember I got that leap. Bam. Oh, shit, I got $1,000. So that kind of breaks that down. But back to you, as we get ready to wrap this thing up.
Yeah. I think leaps are just, obviously they do cost a little bit more, but the best time to buy a leap is when a stock is down. So if you see a stock is, $20 to $30 down, whether that be on the month, on the week, and it's basically been in the red for the last couple of days, that's a perfect buying opportunity to buy a leap. And not only will it be cheaper because the stock is down, it'll be more beneficial, because that means you really won't, not to say you won't need the stock to move as much as you would as if you bought it in the green, but really all you would need that stock to do is maybe move, depending on obviously the cap of the stock, whether it's a small ticker or a big ticker. But specifically for a big tickers, if you were to buy leaps, it's a lot bigger payout, easier payout, should I say, getting those leaps on those dips. So buy the red, folks.
Exactly. By catching it at the bottom, you get to just ride it all the way to the top. So once again, in the example with Palantir was at $125. It dropped pretty much $30. It dropped down to $95. We slid in, got the leaps, at the bottom, and now we just chilling, you know, waiting
Less
for the
risk, higher reward. Not when you buy
exactly.
at the top and then you got to worry about, oh man, this might reverse or it might not go my way. Like I said, even if it does reverse, at least you have time to buy another contract at a cheaper price. And then in the end, it could be, the best thing that happened because now you have additional contracts when maybe you only initially bought one.
Exactly. So thank you for coming in to help me.
Yeah, appreciate you letting me call in.
Hey, shoot, bitch, we got the tea, baby. You know what I mean? You know how we do. But
Bitch, we got the stocks.
we got the stocks, we got the tea. We got everything you need. But we gonna get up out of here, and we appreciate y'all taking the time to let us, highlight
Let
y'all
us know in
information.
the comments. Let them know in the comments, right? Like what else maybe they want to know. Maybe they want to learn the difference between calls and puts. Things might seem simple, but we could break it down, and things might seem complicated, but we can make it simple and break it down for them.
For sure. So, like you heard what Bree said in the comments, drop all your future questions in the Discord. Drop all your future questions, and we'll put together videos like this for you to enjoy, absorb, like, and all that good stuff. So, thank you for your time. We out.